The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this Tuesday, the 14th of May. 14th, I think is June, right? June. The S&P is down 13 at 2,065. The Dow is down 107 at 17,626. The S&P is down 12 at 2,066. The comp index is down 30 at 48.18. You've got gold up 230 at 12.89. Silver is just about unchanged. The rest are down. You've got crude oil down. You've got bonds down a half a point. Oh, no, up a half a point. Sorry, half a point. And the dollar right now, let me just check the dollar, if I can find it over here. The dollar is, let me put it in. The dollar is, I'm going to move this away, come back, look at the dollar. Dollar is right now, was up before. Yep, it's up 59 at 94.95. So I got to say thank you to our host this morning. Fabulous shows. I hope I can keep up that standard. Today is Tuesday, and of course, Full House Tuesday. What do we have after me? You got your Think or Swim swimming lesson. You've got that takes you to 1 o'clock. 1 o'clock, you got Steve Rhodes. Don't forget, Steve's got a webinar coming up tonight. Should be a fabulous webinar. He loves putting all these little pieces of the puzzle together. Should be very, very interesting. Looking forward to it. The other thing is you've got Dave White. Dave, of course, does the he looks at volume, how volume increases or decreases on a long run, and the art of timing the trade. That's the system that he developed with using Tom O'Brien's book as a source, and put together a great program. And listening to him is always very, very interesting, fascinating, and humorous. So then we've got back to Tom, and then this afternoon at 5 o'clock, you've got Andy Heck talking about commodities. Now, the reason why this is such an important step, you've got the, my big thing for a long time is just make it simple. Look at the volatility index. Volatility index at certain levels that I always go through with my subscribers. And when I did my webinar 2 Thursdays ago, we were looking at what the higher VIX would imply, what the lower VIX implies, and what I was looking at and what we were trying to prepare in portfolios over this coming period that was last week. As a result, we've gone short. We went short the Dow almost exactly at the top. We added to it the next day. We've got short positions. We've got long positions. We're along the gold miners. A mixed portfolio. So far, it's doing very nicely. But most important, and we're along a dividend stock, which seems to be really enjoying this current market environment. To talk about the Brexit, yeah, I'll do maybe I'll do a little later on. But right now, let me just do this because it's really important. I got a couple of very good emails, and I have to congratulate Al. Just a few days ago, he sent me an email saying, short, heavily short. He took profits yesterday, and he said he's waiting for a balance to get back in, but he's expecting even a deeper slide. Congratulations, Al. That was a great call. But let me go to a couple of things. Yeah, I got asked about EDV last night. EDV is the Vanguard extended duration. Oops, I must get out of that. I don't need a 120-minute chart for a long-term look at it. Okay, let's move that away. What we're looking, I'm sorry. I knew that if I went out of that, I'd forget to come back. I wanted to show you this, not this. I wanted to show you this because it was so important. Where did I put it? Is that it over there? That's not it. No. Oh, what did I think I did something crazy just going from the. It was the 10-minute. Where's my 10-minute chart that I was looking at? Well, I need to find it because what I wanted to show was, and I stopped a moment ago because I said I would show for those of people who do intraday trading. Let me just see. I'll go through each one of these. Is this it? Yeah, I think this is it. There it is. Okay. So the E-mini 10-minute chart went to a peak D this morning at 210. That's 210 in the morning at 2081.00, round number high. It pulls back and it goes all the way down to 2069, I think, 2069.50 at 10 to 5 this morning. Goes peak A, peak B, peak C. Pulls back as a spiral up to a peak D, but I'd already drawn in a left side, right side possible preparation towards that level. It got there in an earlier time, but it didn't close above that high that was made at 10 minutes past 2 this morning. What happens is it plunges from the high of the day of 2081.75 down to the low 10 minutes ago of 2064. I would say that 17 points is a pretty big move in such a short period of time. Now there's a kind of a little bit of a relief rally, but as long as the volatility index, which is trading at 2179, is up in the 20s, you remember what I said? In the 20s, you're looking at triple-digit declines. And we've already seen its triple-digit declines. When everyone was saying, hey, how come the volatility index is so high and you've only got, hey, the day is young. Let me tell you, the day is young. If the volatility index holds in the double digits, in the 20s, that is, it's just putting tremendous selling pressure. Then I had a bunch of questions which I wanted to get to of why is the VIX so high when the Dow and the S&P have only fallen just a little bit, a couple of percentage points? And the answer is it's the fear of what could happen over the weekend. So the relief on Monday is either going to be a whopping move to the upside or a very big disappointment, and that volatility index goes even higher into the 28.33 area. But the day's young. This is the beginning of the week. Tuesday, 1.25, not even 1.25 days, 1 day and less than 2 hours. There's a whole week to go. So I just wanted to show the chart, and I'll show you the parameters to watch. All right, now, 2072 to 2073, that's going to be the big resistance if there is a counter trend rally. But believe me, you take out this low of 2064 and the selling pressure will intensify. Just want to get that out the way. Now we can go to EDV. I did not finish the notation of EDV, but it looks very much like any of the bond, anything to do with bonds right now. So it's looking very good. But the question was, what should I do? Well, this is really tough for me because you've got peak A on a very conservative basis. Let me just be conservative by going A, B, C, D. You could count it another way and say there was a restart here with a peak A, peak B, and then an internal AB, which gives you an overlapping C, very sharp C, which should go to a D, which it's done. So all of that's complete, but you've got the left side high of EDV, trading at 134.98, up 87 cents. 141.91 is 7 points higher. So I would say if you're going to get into it, you have to get into it right this second. And that's tough because this is brand new A, B, C, D, A, B. Oh, maybe it's new. C. All right, let me think about that. But when we get back, I've got Don in Durwood, Maryland, and we'll be looking at UNG. So I've got a bunch of things to do. This is a market that's still going down. Be really careful until that volatility index goes back to the 1817s area. I'll be right back. Basil Chapman. Dow's down 112. S&P's down 12. I'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's 118 points down. S&P's down 14 points down. We're going to go straight to Don in Durwood, Maryland. Hi, Don.
Yeah. Hi, Basil. Thank you for taking my call.
My pleasure.
Yes, I have a small position on UNG. I bought it last week at 788. I was wondering, I'd like to know what's a good entry point for adding on.
But wait, Don, you bought it at what price? 7 what?
788.
But it's at 780 right now. So you bought it. Oh, you bought it like Friday or so, Thursday or Friday.
Right. Yes.
Okay, I got it. Okay. So this is what I'm looking at. The notation that I have, it could turn out that I'm wrong, but I'm going to call this brand new peak B instead of an alternate count E, and I'll explain why. There was a peak D in the Chapman Wave. You go peak A, B, C, D. Those are higher peaks, and I wonder if I've got that drawing right now. I think it's worth it just showing it for now, if I can. Yep, there it goes. Now I have to find, it'll take me a second. It just makes it real easy for those of you who are new to the Chapman Wave methodology. Here it is. It's real simple. It looks like this. You see, you make a trough that's important low, and then you merely count each successively higher peak. As the leg is moving up, it's called a floating leg A, or a peak. In this case, it's an A. Until it makes a peak, then it's called a peak A. The moment it goes by that peak A by 1 penny, it doesn't mean if it's the New York Stock Exchange trading at 10 or 11,000, whatever it is, by 1 penny, it starts leg B. And then B goes on until it pulls back. It becomes a peak B, and that goes on until D. D is where you got to make some decisions. Now let me move this away and show you exactly why I wanted to show that for new people to the Chapman Wave methodology. Within the context of the UNG, it made a low of 578 way back. We've had this periodically. It had a low of 578 back on the 3rd of March, and then it ran up very quickly to peak A, B, C, D. If it goes very quickly to D, it says, be very careful, because after D, you could, if it's that quick, you could have a pullback. It's not a major sell signal or anything. It just says be careful. And what happened is we got a very sharp pullback. I should have put a down arrow in there. And then the next one was a move up that went to an E. And that E, I remember now exactly why I didn't put a down arrow. Because the MACD was still strong and the stochastic was the only thing that went below 80%. I didn't. I put a plus sign, and that invariably says there's going to be a new recovery high, which is exactly what there was. It went to an E and then pulled back sharply, started a brand new peak ABCD, also a very quick one, from the 6th of April to the top that was made on the 22nd of April. And then it took its time, but it did take price to a certain extent, but it gave back only half the gains from the 578 low to the 738 high that was made on the 22nd of April. So now what I'm looking at, half the total that is. So now I'm looking at a brand new A to B, and the way it's holding, the way the stochastic stuck at 90%, still holding very well. The way the MACD is not quite expanding, but it's still very wide. The distance between the fast-moving average and the slow says to me that 755 is going to be very strong support. Now, I would say to you, I wouldn't like to see it go to 755. That's a lot of percentage gain they're giving up there. So let me just do this on the 120-minute chart here. I'm looking at that. A, B, C, D. Okay. Yeah. So the way I'm looking at it right now, I think when I was asked about it last week, I believe I said that from the way that the weekly chart, the monthly chart is still not very good, but the way the daily chart is acting and the way the weekly chart has been improving in the technicals, I think that the UNG has further to go on the upside. Now, whether it has sudden spikes or it goes sideways and then suddenly has a stair-step move to the upside, I'm not sure. But you've got a small position. Is this a position that you would add to, Don, or is this it you'd like to see where this can go?
To add to.
Okay. So let's make it real easy.
No, I don't want it.
I'm sorry, what?
No, just to add to.
Okay, so you've got it now at 780. It's at 781. You're up a whole penny, but that's okay because it's had 3 days to digest that very big spike, and so far that's very good. It's also very good in the 120-minute chart. The way I'm looking at it, there should be some pullback, and I'm thinking that the 772 to 765 area will be quite important because if it takes that out, it will test 755. So can I do this? I hope you don't mind. I'm going to back away. Normally I would say, you've got your first position at 780. The next position, I would put in a small buy at 763. Try to maybe have patience to get 758 because 755, that area 755 to 752 should really be a strong containment area as it builds strength to go to leg C. And now the other thing I'm going to add is the leg C should start by tomorrow or the next day. It's going to happen very quickly for UNG natural gas. This is the United States natural gas. So I'm going to make the recommendation that you've got your small position at 780. If I would like for you to be able to hold off buying anything new until we can see if it tests the bottom of that candle of 770 that was on the 10th. So I'm saying to you, 772 to 765 is kind of the area that I would add another small position. But the big thing that I wanted to mention is it's had such a strong move in this market environment. What if it suddenly takes out the high of 795? You've lost yourself the chance to add to the position in the 780 area. So I'm going to suggest to you, you have patience to try to see if you can get it a little lower, because my target, if it breaks out into the 8s, will be that high that was made back on the week of the 8th of January of 927, which is really quite a way to go. I'd have to go step by step. I'm going to say 849, the high of the week of the 29th. That would be the next target for me. So I'm going to say to you, you got two choices. One is you could add just a little bit now, not the original small position, but just a little bit to kind of get your foot in the door, because if it suddenly moves higher, I'm going to say to you, if you've got a little bit now at 780, I would add to it at $7.96. 1 penny above that peak B, I would add. So this is a part A, part B. You add just a tiny little bit right now, and if it breaks to the upside, you add at, what did I say, 796. The other is that you add a little bit now, but you really have patience because you want to get it a little bit lower down. Preferably, you don't get it a little bit lower. because if it goes a little bit lower, you're kind of vulnerable to quite a bit of testing. This high-level consolidation right now, 3 days, I've got the rule of 136. It's on the third day. I don't want it to go to 6 days. I'd like by tomorrow. It's smashing through that 95 area. So is that clear? So you've got your small position. If you want, you could just nibble on it now to be ready in case it breaks to the upside. Then I'm going to add a little bit more at 796. But if it pulls back, you've got one small position, one tiny position, and then you're going to add in the 772 to 765 area. Does that help you?
Okay, all right. Thanks, Basil.
Okay, if we're correct, then it should be going into the eights very soon. Thanks so much for calling, Don.
Hey, thank you, Basil.
Thank you. We'll be back, folks, straight after this break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So in sum, let me just say that was the VIX index on a monthly basis. Had a good question about the VIX in relation to what happened last year at this time. This is last year. This time we were kind of flat. We had a big spike into July. That was the Eurobank stress test crisis. But looking at this, what I'm looking at is that the volatility index is just, this is Tuesday. I mean, we've got all the way until Friday to go for the weekly chart. And the monthly chart has, I'd say, a few weeks, since this is only the, whatever date it is. So what did I say it was? The 14th of June, halfway through the month, not even halfway. So at this particular point, what we're looking at is that the resolution, I don't care what the decision is in Britain. I'm only just interested in the result, in what the market says. And what we're looking at here for the first time, we've actually got first time in since the big spike into March, I think it was, January, we've got leg B going to a leg C in the VIX index weekly chart. And it very often fails at C. Every once in a while it goes to a D like it did in August of 2015. So this is very important. My reading says that there's anything that is even close to a finalization of a decision. In other words, I think I don't even know when the date is. Is it 24th? When would that be? That's over a week. Today's the 14th. Yeah, a week's time. Is it when anybody in the den tell me the date? I think 23rd. My friend leaves London, and they said very timely to be leaving London. So that made the 24th, I think, the BRICS 23rd. Oh, it is the 23rd. All right. So the 23rd is Monday. I'm guessing here. Give me a calendar right here. So calendar says June 23rd is Thursday, Friday, Saturday. Is that a Saturday? Oh, whoa. No. Am I in the right month? Where is this? 23rd. Oh, it's Tuesday. So if today's the 14th, 7/14, doesn't make sense. All right. Well, on the 23rd, we're looking at today's the 14th. So that's, 9 days. Okay, so 9 days, that's a Thursday. Oh, okay, I've got it. A week from Thursday. Whew, that was a little slow, wasn't it? A week from Thursday. That's a long time in this business. Anything can happen. So any rumors that say, okay, things could be this way or things could be that way, however the market takes it, if the market takes it as a positive market resolution, I don't care what the vote is, if the market says, good, now we're done, we can move on, then I'm looking at this and I'm saying, this volatility index in the 22s, this is serious stuff. And the Dow's only at 17,600. It isn't 16,900. So there could be a huge move to the upside. I'm not saying they're going to be, because you've got to just be prepared. What if this and what if that? And my what if says that if the volatility index is not sure at all and it remains in the 20s all the way through this week, by the end of the week, we could be at the 17,200 or even left. Now, I had a question from Sarah saying, VIX move up in January of 2016, similar to August of 2015, price time match. And exactly at that moment, I've got someone IMing me in the den saying, do you have any time price match on the VIX? I love that. That's very nice. It's gone. There is a time price match. Let me show you what it is. It's right here. What is a price time match? It says from one particular peak or trough, have you made a fulcrum, a level on the downside or upside that looks like it could be the plumb line, the midpoint for a move to the other side? So let's color this in red just for now. And I give it a little design there. And let's make the next one green. And you'll see that if I put the two together right there, I shouldn't say that we're out of time. This is the week. This is the week that there could be a huge move to the upside continuing. I hope Brent still has almost all of his positions. Remember what we discussed yesterday, Brent? You had, I think, 1,000 shares of the TVIX. And I said you could start to take a little bit off. 310 is the level. And if you want, and we close at the low of the day in the market, if we gap up in the morning, which is kind of what happened, you can take a little bit more, but you want to keep a core position. And now we're looking at the time price match right here. Says that the week of the 17th of June, the one we're in, has the chance to have a very sharp move, and the following week could see a down move. So that's the way I want to look at it. Yes, I always look at price time matches. In this case, Yesterday, I didn't think it meant very much. This morning, of course, I think it means quite a lot because we've rallied even further. The VIX has gone up to a high of 22.16. It's at 21.45 right now. It's getting a little tired. It looks like the 120-minute chart, I think, when I looked at it last year, it's trying to consolidate. But yes, so in answer to both in the Dan and in the email, yes, this is the price time match. This is the week. And it behooved me to actually take a position for my subscribers in the TVIX. And for some reason, I refrained from doing it because it was at 2 or 2.08. And, at 2.08, you got yourself a reasonable stop of 6 or 7 cents. You're talking 10% already. That's a big thing. Well, of course, it's up 80% or more. It went from 2 to the high today of 360 something, 350. Let me have a look. 370. That's a huge move. All right. So the VIX is becoming a little stretched, but it's still saying that if I'm holding here, it's saying, watch out. Don't get too cute about buying. All right. So now let's do this. So I did that. Nikkei. I did Nikkei yesterday. The Nikkei should have had downside reversal. Remember, I said Nikkei has a very ugly pattern. It's the arch formation, ugly pattern in the monthly, ugly pattern in the weekly, even though they're not even close to being done. But the daily says, 15,745. I'm liable to test the low just below 15 in the 15,400s. I wanted to go to the next question. Was EWJ. See, EWJ, I wonder if I've still got it notated. They seem to disappear. Yeah, there's the arch formation. Peak, look, peak A, there's your peak D, right? Doji high. Pulls back, starts a brand new buy mode, a buy signal that goes to a buy mode, A. B, that break starts the buy mode, and that D, another Doji D, says be careful, and you've got your H pattern, lowercase h, Chapman wave, lowercase h formation. Breaks the left side low. And what I said is, if it breaks the left side low, it has within 2 days to close above 1138, and the EWJ, the iShare MSCI Japan ETF, I believe, trading 1131 down 13 cents, has until it has to 1138. It has until tomorrow to close above 1138, and it's 1131 right now. It could do it, but I'm just saying. EEM. Another question I got, same pattern, except it failed at a peak B. It'll be a B minus, but as a peak D in the weekly, it's trading at 32.74. This is the iShares Emerging Market ETF. It doesn't look good. It looks a little better than the EWJ, but I think that the big test will come. Does it close below 31.70, the low of the week of the 20th of May? Okay. Whoa, we're covering a lot of stuff here. Let's see. SYF. We'll look at this. Oh, when I get back, we'll look at some of these bank stocks getting decimated. No, credit card like American Express and what is it? COF. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Let me just do this real quickly. A question about ANET, which is Arista Networks. Yeah, ANET finally made that peak D that we were looking at. It made the D, and I'm saying to you, just be real careful here. If you're in it, you were in earlier, so you can stay long, but I would just be a little hesitant about being too casual about it, because 70.33, it's at 72.22, up 1 penny. Good action today. But the chart weakness in the technicals suggests that it will test between 70.50 and 69.50. That's going to be a 69. Yeah, 69.50 is a real test. It breaks that and it goes lower. I actually like it, and I'm going to put it down here in my notes. ANET, which I hope to look at. I always forget to look at my notes. ANET, there you go. So yeah, to add to, why don't you have patience? Maybe by Thursday or Friday, or even early next week, you can start adding to it, but give it just a little time. So that's it. Now, what I want you to do is this: a couple of questions, crude oil and stuff. I'll get to that, but I did not want to run out of time before I showed you this chart. Remember, I discussed it in terms of the Chapman wave patterns that we've used for years and years that repeat over and over. These are fractals. These are patterns that in every time frame you can see the same thing form. In other words, it's a template, and that template can expand or contract, but it's always the same pattern once it's set. And this pattern of the lowercase h that can break down from the left side is exactly what I've been talking about. I spoke about it on my webinar, I made a big deal about it. I said, my eye says that there's a real good chance that in this formation, that if you take out this low right here in the middle of the 30-year, the white is the 30-year T-bond yield, the brownie gold color is the 10-year T-note, and this is the 5-year T-note, the cyan color. Now, what I'd say is, if you take out this low of 2511, 2.511, made April the 8th, there's a real good chance not only will you test that the history of this pattern in this chart, each chart has its own characteristic, says that you will probably close below it. And that makes, this is why this coming week is going, not this week right now, but the coming week is going to be absolutely critical for all the analyses. Why? Because in the Chapman wave methodology, if you take out the left side low, you have just one bar, maximum 2, in which to close above the left side high to be able to have a decent rally. And that rally takes you to the next resistance, which could be a peak, it could be 100, it could be a 9-period moving average, it could be something of importance. And then you got to watch out because it could do a retest. But if it closes 2 sessions, that's in this case weekly charts, 2 sessions underneath 2409. Last week it closed at 2429. So this is the first week. You've got until next week. Well, doesn't that coincide with everything we're looking at with Brexit and all that stuff? Now, what I said is I would talk a little bit about it. Let me just find this for a moment if I can. This is by Axel Merck. people tell me that he's a very highly regarded analyst. I just periodically look at his stuff, and I like it. I don't follow it, so I can't call it. But what he's talking about here, Brexit, where is it? Brexit, the bad. Did I just go past it? Oh, man. The ugly. Oh, I looked at it earlier. Oh, I can't find it. I'm not going to make it up. But basically what he was saying is that because Britain has its own currency, it does make a difference. That's the essence of what he says, that it isn't a total break because they've already been not fully part of it, and they really just want some concessions. That's the main thing. So how does it affect bonds? The reason why I'm mentioning it is that if there is a sudden spiral to the upside because the market says, phew, we're out of that mess, now we can go on to test recent highs, that's a big deal. And if it is a big deal, it says there's a chance that bond yields could actually rise for a little bit in that pattern I'm looking at. The lowercase h has a good rally. And it makes another H, but from lower down. But what's fascinating at this particular point is that the 5-year hasn't taken out, the 10-year hasn't taken out the 15.67 low. The TNX hasn't taken out the 1567 low. It's gone to 1574. It's really close. And the 5-year is way higher. 1008 was the low that back in February of this year. And now the low is 10.96, way high. What was the point? So what is really important, and I was sent a chart recently by a subscriber, which essentially had the chart of the Dow in British pounds, and it had made a new high, all-time high, a couple of months ago, which implied that money was already moving out. So this is going to be a very important period because so many things are coming together. And now I'm going to show you, this is the chart that I sent to my subscribers yesterday. This is the 120-minute chart. I've drawn the left side, right side price time match, which came in right exactly, which comes in at 11:30 on the 15th. And today's the 14th, so it's this time exactly tomorrow. And in fact, we got through it. We smashed through it before, which makes the 17,664 Dow level 30 points higher, 35 points higher, the area to watch, because if it bounces and closes above it, it could have a sudden counter-trend rally to the 17,068. So it could go 17,068 and 17,020s, and then big resistance at the 9-period moving average of 17,750s sometime this week. So I just wanted to get that out of the way. Now, I've got another thing that's very interesting. I've got a Chapman Wave trend gauge reading which says within 2 days we should have a bounce of 9 to 11 points, just as we did yesterday. Well, isn't that a coincidence? Because we're getting to a point right here. Look at the 120-minute chart without any MACD or stochastic. Look at the Dow. We went underneath the left side, right side price time match, but we haven't closed yet. There's a whole day to finish. And I've got a target of between 17,525 and 17,480s by Thursday. So let's see how this all pans out. In the meantime, there's tremendous selling pressure. The VIX is just not budging at all. It is now it's only up 37 cents, but it's still at 21.34. That is serious stuff. Now let me show you something else. So we finished with the bonds. And I wanted to show you Annette. I mentioned Annette. Yeah, it's 72.14. If you're in lower down, stay with that position. It's acting very well. It's a very strong stock. I would say you could add to the position between 70.50 and 69.70 with a 1-point stop. Or you can start a new position. If you've got your position, you have to add, but that's what I'd be looking at. The other thing is, if by a week from today, today's Tuesday, if a week from today, it has actually rallied above 74.80 to 75.20 to test the all-time high, the recovery high of 75.40. That's going to be really good action. I would expect that leg C will start very soon. So, okay, that's Annette. Oh, well, what are we doing there for time? I've got that little buzzer, which I still have not fixed. Unbelievable. It goes on for months. I've even got one that goes on for about 7 years. I've got something on my computer that I was supposed to update, and I always forget about it. So we've got a break coming up. Dow's down 107, S&P's down 11. Now, when we get back, we'll look at oil, and I'm going to look at projections, and we'll talk about projections when I come back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Next call, I want you to say SYF, huge plunge, 11% decline. This is Synchrony Financial. If you're looking at COF, which is COF is, of course, the bank that drives you nuts. Capital One Financial, huge move to the downside, 5% down, 366. These financials are having a tough time. American Express. So, GT, that's the answer to your question. They look terrible right now. Boy, they're going to need something to really help them. And just real quickly, GPP, USD, that's Great British Pound, making an arch formation. I've been discussing this. It's got a whole week to go, over a week to go. I would not be surprised if it gets down to 1.40 to test the 1.39s, that area, left side support. So, yeah, we've got plenty of time to be looking at that. Anyway, I covered all those things. Now we're going to go to our caller. We've got Brent in Martinez, California. Brent, how are you?
I'm doing well, Basil. It's great to talk with you again.
Yes, good to talk with you.
I did close that TVIX position this morning at the open at 365. That to me was
fantastic.
I was a 50% gain in a couple of days. That's good enough. And I have that's kind of the reason I called. Is I do have. I bought them around the same time. I think a day earlier. I bought. I have 12 contracts that puts on the diamonds, the 178 Julys.
Oh,
And,
very good.
Yeah, and those are doing well. So I really didn't need to. There's no reason to hang on to it. I figured I'd already.
That's a fantastic gain. Just doesn't happen very often. So grab it when you got it. Not only that, right at this particular point, within this very moment into tomorrow at this time, I wouldn't be surprised if there is some pullback in the volatility index as the Dow finally tries to have a little bit of a rally. It only has to have a little bit of a rally, and you'll see the VIX go from the 2137 area to the 19s very quickly. However, this is the big thing. With a whole 13 days to go, if the VIX is at 21, if it hits 21s, 22s now, I don't know what's going to happen over the next week. So that's the reason why I initially said to you, if you can keep just a little, at least a core position in the TVIX, because of the fabulous entrance. But, taking a gain like that is just, there's nothing wrong with that. So that's in the moment we've got. You want to look at the diamonds. And
If you could, please, yeah.
Yeah, so the Dow Diamonds made 180.18. You remember we spoke, folks, the peak D, the fourth highest peak in the Chapman wave. It is incredible how many times that becomes the major turnaround point. It doesn't have to, but how many times it does. Look, right here, 181 on the 20th of April, peak D. Plunges from 181.40 down to 173, 8 points, goes to a trough F, and then it starts a rally back to a peak D at 180.18 on the 8th of June. So now it's pulled back from 180. It's pulled back about 4 points. It looks from the technicals, from the MACD and the stochastic, that there's a good chance to test the 174s. But at the same time, it's really interesting that the Dow Weekly, let me just show you something here, INDU. The Dow Weekly went to a peak C in this big W formation and has been really having a sideways consolidation. I just wanted to show that because it has the W much clearer. The diamonds, of course, is a trading vehicle for the Dow. So I'm looking at this and I'm thinking that if there's a close this week under 176, at least by Tuesday to Wednesday of next week, we could be seeing a test of the 174s. If everything stays exactly as it is right now, in other words, if there's no good news relationship to Brexit to help the markets. But at the same situation, I'm looking at the weekly chart, and it makes this week's close really important because a close under 174 says it's the first time it's closed under the 9-period moving average, even if it's intra-week, in all this in 4 months. So those are the levels to look at, and 178.07 is the resistance. Hope that helps you, Brent, and congratulations on a fantastic trade.
All right, thank you very much, Basil. Have a great day. Take care.
Thanks, folks. I'll be back with Tom O'Brien later today. Have a great rest of the day. Otherwise, I'll see you tomorrow. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.